Okay, so Wall Street just got a bit of a jolt, didn't it? Fresh tariff threats popped up, rattling markets that, well, just yesterday were hitting new highs.
Yeah, it definitely feels like a new wave of trade uncertainty washing over things. Investors are having to reassess pretty quickly. And it's Friday, July 11th, 2025.
Exactly. Welcome, everyone, to the Deep Dive. We're here to give you that shortcut, the comprehensive look at today's big financial moves and, what it actually means for you. So after a really breathless climb all week, it feels like U.S. markets finally paused for breath today.
Definitely took a breather.
We saw the S&P 500 dip, 0.3%? Pulled back from that record close yesterday.
Yep, just a slight pullback there.
And the Dow Jones Industrial Average dropped over 0.5%.
Bit more significant there, yeah.
Even the Nasdaq Composite, the tech index, saw a small decline, 0.2% down.
Right, and the Russell 2000, representing smaller companies, that took a bigger hit, down about 1.3%.
So a clear pullback. But even with that backdrop, there were some surprising individual names that really popped, right?
Yeah. Absolutely. And that's what's kind of fascinating. Despite the S&P and Nasdaq easing off those records from Thursday, you had some real standouts. Take Levi Strauss jumped, 11.3% today?
Wow, yeah.
They smashed Wall Street estimates for sales and profit, and they raised their full-year forecast.
And that's despite tariff cost worries.
Exactly. Yeah. That's the kicker. They expect higher costs from tariffs, but still raised guidance. Just shows a strong company can, sometimes push through those macro headwinds.
Right.
And then there's NVIDIA. Just keeps climbing. Another 0.5% gain today.
This is after hitting that $4 trillion market cap yesterday, the first ever.
The very first.
Yeah.
Closed above it yesterday, notched another record close today. It's just incredible momentum there.
Truly wild. Okay, so the broader market takes a step back, but we have these individual stories. What was the dynamic underneath it all? Why did some sectors swim against the tide while others, sank?
Yeah, if you connect the dots, it mostly ties back to those tariff headlines buzzing around, plus some very sector-specific stuff. So on the winning side, energy was actually the only S&P sector in the green, added over 1%.
Oil prices helped there, I imagine, settled up nearly 3%.
Precisely. WTI futures up over 3%. So you saw names like Halliburton jump over 4%, Baker Hughes up 2.5%.
Okay.
And precious metals, classic safe haven move when things get choppy. Gold was up over 1%, near a 3-week high.
And silver really took off.
Oh, yeah. Silver surged more than 3%. Actually touched $39 an ounce, highest since 2011.
Wow.
And don't forget, crypto. Bitcoin hit a new record, blew past $118,000. Intraday high was nearly $118,900.
That's adding to some already big gains this year.
Over 25% year to date now. And that linked crypto stocks too, like MicroStrategy and Coinbase.
Got it. Any other winners?
Yeah, a few pockets. Select Tech did okay. AMD rose almost 2%. Lots of buzz about their new AI chips. The MI350 series maybe competing with NVIDIA's Blackwell. Alphabet, Tesla, Microsoft also saw some green. Amazon was up about 1% as Prime Day wrapped up.
Right.
Oh, and defense and aerospace stocks had a really good day. AeroVironment up 10%. Kratos Defense up 12%. That's a 19-year high for Kratos.
What drove that?
Defense Secretary Pete Hegseth announced new plans for domestic drone production. Big emphasis on Buy American.
Okay.
Also, Kraft Heinz gained 2.5% on those breakup rumors, and AMC popped 10% after a Wedbush upgrade. Busy day for individual names.
Definitely. So what about the losers then? Where's the pain felt most?
Well, looking north, overall tech and consumer non-cyclicals really weighed on the Canadian market, the TSX. In the U.S., PayPal took a hit, down almost 6%.
Why PayPal?
Reports that JP Morgan Chase is planning to charge fintechs for accessing customer data. That's a potential game changer.
Yeah, it could be.
Dayforce, the HR software company, lost over 5%. They have a significant presence in Canada, so that renewed trade tension likely hit them. Casino stocks like Caesars were down too, almost 5%. Regional gaming reports for June showed revenues were down year over year.
Okay. And airlines. Delta had strong earnings earlier this week, but they cooled off today.
Yeah, big cool off. American Airlines fell over 5%. United was down over 4%, both among the biggest S&P 500 losers.
Any specific reason?
Seems like concerns about that proposed partnership between United and JetBlue might be weighing on them. The whole airline ETF, JGSS, fell over 2%.
So, speaking of Canada, how did their market react directly to these tariff announcements?
Yeah, what was the damage up there?
Well, the S&P TSX Composite Index, it finished down about 0.22% today. That pulled it back from a record close just yesterday.
So it ended the week pretty flat overall then.
barely changed, down just 0.05% for the week. But looking ahead, the September futures contract, the SXF, was also down about 60 points, pointing to maybe a soft start next week.
And this is all directly linked to the tariff news. Absolutely. President Trump announced that steep 35% tariff on Canadian imports, effective August 1st. That's up from the current 25%. Serious stuff for Canada's economy. Boss, yeah, todas yara hogaya.
35%. Wow. Are there any exceptions?
Well, the White House did put out some clarification. An official said many existing carve-outs think USMCA-compliant goods, energy, potash are expected to remain exempt.
Expected, but not final.
Exactly. No final deal is drafted yet. And Canadian Prime Minister Mark Carney said they're working hard with the U.S. to trip and get a deal done before that August 1st deadline.
Okay, so a lot of pressure on the Canadian side. How does this uncertainty, plus their own jobs data, play into what the Bank of Canada might do? Rate cuts were maybe on the table.
Yeah, this really shifted the odds. Before the jobs data and this tariff news, the market was pricing in about a 27% chance of a BOBO-C rate cut at their July 30th meeting.
And now,
it's cratered to just a 13% chance. This kind of uncertainty makes it much harder for them to, justify using policy right now.
Right. And all this fed into the U.S. dollar's strength today, didn't it?
It sure did. The dollar index, the DXY, climbed 0.2%, pushed back above 97.50.
So traders seeking safety in the greenback.
Yep, classic risk-off move. It's holding near multi-week highs now after actually hitting its lowest point since early 2022 just last week. Quite a rebound.
And that U.S.-Canada tariff news specifically must have hit the Canadian dollar hard.
Immediately. USD CAD surged up towards 1.3700. Huge pressure on the loonie.
And other currencies felt it too.
The euro slipped below 1.17000 against the dollar. The Kiwi dollar retreated towards the 60-cent handle. And even USD-JPY dollar yen found its footing again, trading near 147.
So what's driving this dollar strength overall? Is it just the tariffs?
It's a mix. Definitely the geopolitical risk from tariffs is a big part, but also expectations of relatively robust U.S. economic data. We're waiting on jobless claims next week, and the fact that the Fed still seems, relatively more hawkish compared to other central banks.
Gotcha. So a busy day, a lot of moving parts. What should we be watching for next week then? What's on the calendar?
Okay, next week, things really ramp up on the earnings front. We get into the big banks, JP Morgan Chase reports.
And we should probably remember what Jamie Dimon said just yesterday, right? About complacency in the markets regarding tariffs.
Exactly. His comment was, unfortunately, I think there is complacency in the markets. Definitely something to keep in mind as banks report.
Good point. What about economic data?
Key things to watch. U.S. initial jobless claims, that's always important. And the big one is the Consumer Price Index, CPI inflation data out on Wednesday.
And other catalysts. Still watching trade headlines.
Absolutely. Any response from the European Commission on the U.S.-EU tariff situation will be crucial. And of course, any commentary coming from Fed officials.
Okay. And before we get to the game plan, the retail crowd always finds a way to capture the mood. What was the meme moment today?
Right. Well, fittingly, given the news, there was a pretty popular post over on Reddit's Wall Street Bets. It was a picture of the Incredible Hulk, but draped in a Canadian maple leaf flag labeled Greenback Hulk.
Okay, I can picture that. Perfectly captures that sort of strong, maybe slightly irrational reaction to the U.S.-Canada tariff news. Love it.
Definitely summed up the vibe. So, looking ahead, quick game plan for navigating this. 3 points.
Lay it on us.
Okay, 1. Policy uncertainty is high. Trade headlines can whip markets around fast. Be ready to adjust.
Got it.
2. Keep an eye on the VIX, the volatility index. It closed today around 16.40, up almost 4%. It's a key gauge of investor fear or anxiety.
Watch the VIX. Makes sense. And 3rd.
Avoid chasing breakouts right now, especially just before those big bank earnings next week. Sentiment could flip pretty quickly.
Good advice. Avoid chasing. Okay, and for a final quick take today, what's one stat that caught your eye?
Well, speaking of sentiment, this one really highlights the shift. 401k investors apparently rushed into safe havens during the second quarter.
Oh, really?
Yeah, trading levels in retirement accounts hit their highest point in 5 years. People were actively shifting money out of stocks and into fixed income. Bonds actually captured 42% of the inflows.
Wow, 42% into bonds. That definitely shows a desire to dial down the risk, reduce that volatility. Okay, so there you have it. Our deep dive today really showed markets trying to digest these renewed tariff threats. Sentiment definitely shifting, but also some pretty strong individual stocks pushing back against the trend.
Yeah, the overall market sentiment feels, I'd say, range-bound, but definitely edgy. There's just a lot of volatility and uncertainty still bubbling under the surface thanks to these trade headlines.
Edgy is a good word for it. And that leaves us with a final thought for you to chew on. Considering the dollar flexing its muscles again as a safe haven, what are the wider implications? For a global trade, yes, but also for your own portfolio, if trade policy really becomes the main driver for markets in the coming months. Something to think about. Thanks so much for joining us for this deep dive into today's market action. Remember to subscribe wherever you get your podcasts, and we'll be back to break down the next big moves